Righto, boys. Gee, slept well last night. Oh, what a big day yesterday.
Oh, it's big, mate.
Oh, thank God it didn't repeat itself. But a bit of expansion on yesterday's yarns. WA nickel chat. BHP a bit late on the news articles, but they're out now. But has it gone a step beyond?
We're gonna have a good yarn about some of the gut feels we got about some maybe policy changes that look potentially about to work their way through.
Money mine, as you know, a money of mine gut feel. She's pretty much a sure thing sometimes. Mate, a bit of Liontown follow-up.
Yeah.
Stanmore, Coronado, Oz Pacific. Bit of coal news.
Yep.
Mate, still need it. She's
Yeah.
still going. Bit of rapid fire. BHP Xplor plan for a Explorer that's gone up 70% today, and Endeavour's CEO, a bit more news there.
The rapid fire, by the way, I'll tell you who it's going to cover off as well, just in case the punter wants to stay tuned for that.
Because not like you'd be leaving anyway, but...
Plenty. We've got Iluka in the mix there. We've got Mayur, who we spoke about.
We've got True North Copper, Delta Lithium. We've also got in there Cali Metals, Element 25, and Iluka. Like
mate, she's all bloody happening.
Beautiful.
Tell you where else it's happening at the moment.
Tell me, matey.
Just south of Cal,
Yeah.
K-Drill are pumping some bloody air core drilling for Aruma's Salmon Gums project. Good to see the junior goldies looking for some stuff around Cal, facilitated by the excellence of K-Drill.
I haven't heard of Aruma, but I have heard of K-Drill.
That's because Ryan O'Sullivan hasn't drilled it yet.
Yeah, gotcha.
And we'll get into why he is such an influential factor here. Because look, we're talking RC, we're talking diamond drilling, we're talking air core as well. And mate, tell you what, like the biggest thing about K-Drill, the biggest differentiator I see is management of downtime. So look, mechanical hydraulic downtime can be just an absolute contract killer. But this isn't an issue with K-Drill. You know why?
Because when the rig stops, Ryan's hands...
Exactly. So they, like any mechanical hydraulic failure, while they're fixing it, Ryan O'Sullivan injects himself into the scene as the operations manager, so hands-on operations manager,
Relatable.
and just starts fucking hammering it and just drilling with the bare hands. So I have actually heard that they went down on night shift one night and the Brooks Learjet flew him to site quickly like that to get him in because there was downtime. So look, collaboration between the partners and K-Drill just take downtime extremely seriously. And you know something else Ryan O'Sullivan provides in the
endless content for us.
Yeah, well, that as well. Look, and you can't put a monetary value on that either. But with the RC drilling, I've heard stories like you've heard the story. Sandfire was one where they're like drilling right to the end. They're about to pull the rods, about to give up, ran out of money, and then right on that last bit of penetration, they hit the motherload.
Yeah,
they hit the motherload.
Classic exploration
and
story.
I guess from that, Ryan, just to be sure, Ryan O'Sullivan, he takes this very seriously. So he goes around to each finalised RC hole, takes a deep breath and just blows this almighty exhale down the hole to flush up any little rock chips that are left at the bottom, because that rock chip, ladies and gents, might contain the assay of the motherload. So look, mate, that's quality control you won't see anywhere else. So if you want Ryan O'Sullivan to come and find your motherload, get in contact with K-Drill.
You'll find another
I was
degrusser.
so careful with this ad because I could have gone down some weird parts about this.
I think you nearly did.
Exhaling,
I think there was some fringe territory.
Toe on the boundary there.
Hit me up on the Hootaroo chat if you want to hear what I really wanted to say.
Cheers, K-Drill.
Oh, mate. And look, we can't forget our great friends, one of the foundation sponsors at Terra Capital. Bondi's going to be, he's coming over this quarter, he reckons, and we're going to do a bit of a hone in on the North American and South American landscape.
Yeah.
Something that we want to get up the curve more on. They're heavily invested over there, Terra Capital. I would put them in the guru category. So, and speaking of gurus,
Tell me,
I
mate.
guess what we learnt from Terra last year, there was the North American, South American investing mandate, you'd say. DK, Dylan Kelly, the Terra man that you would say is, I've never seen a man with such thirst for information. Like he knows a shitload about rare earths, which is one of the great shows of 2024.
He does.
We also learn about Mr. Wong's in Sydney.
Yeah.
That's a bloody great Chinese restaurant. Right in the
Very
heart of
fancy.
that Sydney finance industry where everyone's having a crack. My great part of the world. And
God's country.
And mate,
eh?
we learnt Terra Capital are bloody great supporters of young fellas like us having a go in the media business. And we can't thank them enough for their support. I think I talked to them yesterday. I said, look, thanks a heap for supporting us since we weren't really selling anything for you, but they just love it. So love your work. Thanks, lads. Love
stuff,
your work,
guys.
Terra Capital.
Cheers, Tara.
Shout out to one of the money miners' missuses that he said has no interest in mining or finance on YouTube, but watches the ads every night. She sounds like a bloody legend. Right, what's going on, boys? Let's have a bit of a frank discussion about some of the media articles today relating to not just nickel, but the mining industry, competitiveness, and what is driving it.
Yeah, definitely a big nickel skew on this one, and I'm keen to have a bit of a frank chat, get your thoughts out there in the open, and maybe speculate on what I think might be some underlying motivations. But this feels like a discussion that's going to be had more and more in the coming months. So I don't know about you guys, but I'm sensing something is about to happen from a policy perspective as it relates to our mining industry right now. I'm specifically talking about the flurry of media articles that swiftly emerged yesterday upon the announcement of Wailu's closure of their Kambalda ops there. Take a look at this, right? Front page of the West Australian today. Crisis talks in nick of time. Resources Minister in emergency meeting with industry amid nickel nightmare price drop.
I only laugh, Trav, just because of what some of the West Australian headlines front pages have been before.
Mate, you and I are probably thinking alike on this one. Normally the front page of the West Australian is reserved for the bikie wars or Harvey Norman ads.
Oh, mate, the bikies would be spewing.
It wasn't just the West though, right? We saw, in just the last 24 hours alone, I saw Forest Nickel closure forces BHP to shut up WA plant in the Sydney Morning Herald. There was another article in the Australian. There were numerous articles in the AFR, and that's just naming a couple. So it's been something that's really, really caught on. A lot of jobs at stake, and a lot of pride in our mining industry here in WA.
And like a business story on the front page of the West. Like if you're listening to this and you're not from West Australia, then you probably don't think that's maybe a big deal, but it is. It's not just a business story on the front page, but it's regarding a meeting that hasn't even happened yet at the time of its publication. And so, of course, this front page business story commands a deep dive on page 5 of the paper. And all of this really piques my interest, Maddie and JD, because this is not like the West Australian at all. On the right-hand side of page 5, because I opened it up and I read it, page 5 of the story on the front continues, and it's all about this urgent meeting being called by the Australian Minister of Resources, Madeleine King. I have to read a block of this article, which includes her comments. You guys ready?
Right, rip it.
Ms. King said, though commodities traditionally go through a natural and cyclical boom and bust cycles, the current state of the lithium and nickel markets is cause for worry. The potential prolonged impact this could have on Australia's energy transition, local workforce and development of Australia's minerals sector is a matter of great concern, she said. I will be working with industry and experts to develop an urgent plan to ensure we can turn the world-leading reputation of our resources industry into an advantage in the international market for our local companies. I am determined to ensure Australian miners can continue to compete with cheaper and lower grade and high carbon intensity minerals produced elsewhere. Okay, I think it's worth discussing those comments, but just before we do that, let's take a look at the story on the right-hand side of page 5, right next to this one, also a business story. It's about BHP's decision to close the Kambalda concentrator, which was processing Wailu's ore, not the smelter. This is just the small concentrator that was turned on for Wailu there. And it includes comments from BHP's nickel boss, Jess Farrell. I'll read a chunk of that too.
Geez, this is like getting the paper delivered out the front in the bloody dressing gown and the cup of coffee and just sitting back and narrated by Rick Ardinio. Take it away, Cobber.
I am your narrative of the West Australian today, but I swear I've got a point to all of this. Okay. So Jess Farrell, the Nickel West boss, her comments are, here's the article. I'll read a chunk. The decision to put part of the processor on hold comes down Comes less than a week after the BHP revealed it was mulling all options, including a write-down regarding its nickel operations, citing a sharp fall in prices. Operations are being actively optimised and options are being evaluated to mitigate the impacts of the sharp fall in nickel prices, the mining giant said at the time. Ms. Farrell said Nickel West was a complex business with a multi-stage supply chain in a fast-evolving global market. And this is her quote, "We are looking at a range of options to remain globally competitive in a very tough operating environment. Costs have risen sharply and continue to go up while prices have fallen as new supply comes to the market."
So echoing the thoughts we'd seen on the 18th, I believe, in BHP's quarterly.
Yeah.
Yeah, right. What's the thoughts, Trav, and the motivations behind these articles, or maybe who's influencing the articles?
So first to the comments about the Nickel West business from Jessica Farrell. The quote that's there, looking at a range of options to remain globally competitive in a very tough operating environment. JD, Maddie, I know I'm the cynical one, right? But do you think one of those options could have anything to do with the emergency meeting being summoned by Madeleine King?
Getting some government dosh. This sounds like The Big Short, when their bloody treasury's doing a bailout.
When I sit back and I think about that statement, like, how can a company remain globally competitive when the cost curve has changed thanks to Indonesian supply? The only thing I can realistically come up with is government subsidies, like you said, Maddie.
Yeah.
Which brings us to the front page story. That quote from Madeleine King, right, where she talks about being determined to ensure Australian miners can continue to compete. Like, what does that sound like to you guys?
The only way they can continue to compete is with either higher prices or extra government incentive, and the price bifurcation or higher prices isn't here yet. So it looks like they're on to the only option is getting some money from the government.
You're spot on, Maddie. And I think that there's a couple other comments that I want to draw out from what Madeleine King, who we've actually asked to come on the show, she must have lost our email, but she spoke about how this could have a potentially prolonged impact on Australia's energy transition. I'd love to hear that thought fleshed out. You know, the way I understand it, and one of the angles I look at it, is that commodity prices are falling, electric vehicle prices are falling. That would have an advantageous impact on Australians buying electric vehicles. So now, obviously, that's just one way to look at it, but
the commodities are falling because the supplies become in surplus, which means that there's no risk of them getting developed. Like the risk of EVs not getting developed. They've got plenty of bloody raw materials there ready to go by the sounds.
Exactly. Battery prices have come down, EV prices have come down, makes it cheaper ultimately for Australians to buy these things. Now, obviously, that's very different to the impact that it has on WA's nickel market and, you know, what it does to the employment status of all the people working there. But I'd need to hear that one and her side of that argument fleshed out a bit more.
Government subsidy to keep these mining operations going would be great for the industry because people aren't losing their jobs. So
yeah, I take the other side, Maddie. I don't think it's wise at all to perpetually subsidise, something where we don't have a competitive advantage. I think, look, it's all well and good to advocate for bifurcated markets, but I don't think the Australian government in unison can ever realistically achieve it. All it can really do is subsidise unprofitable and uncompetitive industries.
The issue comes when every Tom, Dick and Harry then tries to take advantage of the subsidies and start up bloody mines.
Yeah, and we should probably have a roundtable around this roundtable with Madeleine King and some nickel industry, experts and have a proper discussion because, I feel strongly that this is an unwise sort of position, but there are people who have a very different view, especially people who have.
Why would it be? Is it more in the context of the fact that it's setting a precedence to operate uncompetitively globally or mostly?
Yeah, totally. And if people keep working at operations which are sort of propped up by government subsidies, then you lose the ability to really carve out competitive advantage that comes from progressing and being at the forefront of your industry. You're a bit of a laggard that is dependent on a government free kick rather than actually moving the needle forward, and that's not great for your long-term prosperity of a country and intellectual potential as well.
I think nickel's just one of those ones it's just always been a bloody boom bust. It's been a boom bust commodity. What was it, 2000 and 2008, I think, was the last one.
2007 was when
2007, yeah.
Yeah,
That
and I
was-
mean, it goes back to our name, and the Money Miners was based on the nickel price rise in the 69.70 Poseidon boom that came from nickel as well. So, I mean, I'd echo what you say there, Trav, and I think we're tying right up on the line of not talking about politics on our potty. But
it's as you said, it's just stock standard human behaviour, isn't it, JD? Look at nickel, but more so lithium. What's happened? Like, let's look at the last bloody 3 years. Bloody lithium's going like this. You've got every mining company either converting into a lithium company or starting a new lithium company or spinning out one, and all they look great for exploration drilling. But let's look at what happened in that last 3 years. All these lithium companies were created. What come out of it that was effectively new? Core Lithium come online. That's now in care and maintenance. Liontown isn't even in production. Mount Holland come out of it.
yeah, Pilbara made a boatload of money, paid
But
$800 million in
But
tax.
they were already going. Like, you know, like what new things were sort of started breaking rock out of it besides...
But we're talking about a 2-year period where a mine coming online takes a while. So, you know, to your exact point, this happened from the first rise up in 2017. 2018 is when the mines come online, and then 2020, Pilbara consolidated, bought the neighbours, and then became what they are. So there is Australia reaping the rewards of the commodity cycle. But you're exactly right, Matty. This is a commodity cycle, and this is what happens. The prices go up. That incentivizes supply to come online. Then the
bubble pops.
Yeah.
We're seeing the bubble pop at the moment. So
Yeah.
we'll see where. And look, there is no saying that this is the lithium. Everyone's saying, Tony Ottaviano saying it's an overcorrection. No one bloody knows. No one can predict the future bloody commodity prices. Could not. There's been views today expressed to us that they don't see it as the correction. They see it as the bottom. There's more pain to come. We don't. No one knows. But
I'd love to see an example of governments getting, you know, intervening and that having a prolonged good impact on the markets. You know,
Tina's another China. That was
what about short-term intervening? But in very rapid
because
things
I think
like nickel.
I think this is where the slippery slope argument is not really a fallacy, because I think, you know, history is filled with occurrences where a short-term intervention just becomes a long-term intervention via sustained lobbying.
Well, it's like
for the status quo.
Look at
Alcoa,
similar
Alcoa,
to
for
the GFC,
example. You know,
GFC with the American bloody banks, all the intervention there.
Yeah.
Well, they didn't bail out Lehman Brothers, thank God, because they were so levered up. But you know, it's the same sort of.
They would argue that all that money got paid back, but I'm not going to take the other side of that argument.
Definitely not. Right, there's the politics for the day.
I think to round it back to the nickel kind of discussion, I tend to be a bit cynical about this sort of stuff. And when a business meeting that hasn't happened yet gets front page of the state's newspaper, which is usually much more tabloidy, or Harvey Norman Addy, I can't help but suspect there is an aggressive lobbying effort already underway right before BHP has to report just how much money they are losing at Nickel West in their half-year results due 21st of February.
So are you predicting that if your cynical outcome did come true, like as in if the government did give funding, it would be for the purpose of keeping Nickel West open?
That would be a cynical view. A very, yeah. And like you say, maybe there's some benefit about that, but I tend to be a bit more cynical about allocation of money in these instances. But yeah.
Yes, I know. Righto, boys. Liontown follow-up.
Alrighty, let's get into it. So right on the back of what we spoke about yesterday, guys, a couple broker downgrades. So we foresaw that, just like most other people in the market. And also I thought it'd be interesting to speculate on potential alternatives to the alternative funding solutions that were rumoured as well. So firstly, on the downgrades, bearing in mind that Liontown is now trading at around about 90 cents. So I'll just reel off a few numbers from some broker reports. So Citi's new base case is $1 target price, that is. Now they're assuming long-term spot price 6% of $1,600 US and 3 million tonne per annum operations as Liontown guided. So Jarden, 91 cents. They mentioned that at prevailing spot prices, so US $900, flat forward, so projecting that price forward, the funding package as it was insufficient to meet projected liquidity requirements. So the implications with the funding package no longer in place don't sound too great. And lastly, JP Morgan price target of 75 cents. So
Ooh.
Liontown's spot margins, if it were in production, would be at break even, according to JP Morgan. And we believe that this could make locking down a funding package rather challenging. So you must have listened to us as well.
They're all basically saying that achieving anything with the existing creditor group looks pretty damn tricky if this debt package has been pulled up. So which kind of just says, okay, if we buy that view from the brokers and we think they've got to pursue alternative funding, where does that leave Liontown? Should we spitball some ideas?
Let's get into it. So we don't need to get into Gene. I think we discussed that yesterday, but the other options. So there's a few sort of funky ones in here. We were chatting about it, getting a bit creative before the show, and I thought it was worth sort of airing on the show. Firstly, I think people will be thinking in their head, is there any capacity for funding for offtake? That's something that we saw, quite a bit of in the last 3-ish years in the lithium space, and I think you can almost entirely rule that off. Between Tesla, LG Energy and Ford, 90-odd% of their expected production is already covered. So I don't think they'll be doing anything on that front. Next up, Trav, you mentioned this one, Pilbara Minerals.
Yeah, I was just thinking, okay, Liontown's a bit beaten up. Is there anyone in the sector that might actually take a view that this is a better time to be a bit more aggressive from an M&A front?
And have the means to express it.
In the past, yeah. And then I was thinking, well, what's the best way if you did want to have a crack at Liontown to actually do it, given you've got the means to express it? We know Pilbara's got a giant cash position, and they've talked a bit about inorganic growth, but they haven't done anything yet to date. And so I was sort of thinking, wouldn't it be a bit funky if Pilbara lent the debt to Liontown, right? Because if you were Pilbara, you might be sitting there thinking, well, I'd love to. I'm interested in an opportunity at Liontown. I think things get worse before they get better. So instead of buying any equity, I'm actually just going to lend them the money, which is going to put me in pole position to scoop the entity up later at a later date.
10% interest rate.
You could be pretty gnarly with the terms of the debt, which might not be so friendly to the equity holders, mind you.
Given Ford is still there with 300.
Yeah. If I were Pilbara, depending on how I was thinking about it, I'd provide a facility big enough to pay out the Ford one and cover the funding gap. And then the challenge is, though, if you're Pilbara, you'd probably have to take a view that you're happy to partner with Gina, and is anyone really happy about partnering with Gina? SQM is, but yeah. So,
but it also leads to the question: do they really have that much money? I mean, that's a big swing you're talking about, and $3 billion cash when they last reported, 800 odd went out in a tax bill in December.
Yep.
Still planning over $1 billion to go out in capex over the next, call it next 2 financial years to get them to P1000 to produce 1 million tonnes per annum.
Yeah,
because they'd have to lend out, 600 odd?
Yeah, and then bearing in mind that we, where we saw them sitting on the cost curve, they're not making an awful lot of money at these prices. If they are, you'd want a bit of a buffer to see you through any prolonged tough periods. Are you really going to go and write a $500 or $600 million check?
Yeah, well, the answer is probably not. This is a low probability kind of thing that would pop up. But I just think,
geez, if it pops up, you're going to look like a bloody
oh
genius.
mate, I really want to see some gnarly stuff pop up. While markets are a bit weird like they are right now, I'd love to see some gnarly stuff like this.
I'm with you,
and I'm excited.
And I find it fascinating to sort of talk through the various options. So Sumitomo also comes to mind, given they come to some sort of agreement regarding potential offtake with the company half a year or so ago. I'd put a relatively low probability to that one.
By the way, Pilbara doesn't have to be the only entity to do this. West Farmers could do it. I mean, they've probably got more to prove Mount Holland before they start buying anything. But they could do something like this too.
Agreed. Can't wait for their numbers regarding Mount Holland and Coronado to come out either next month. And then the last sort of thought was any Chinese groups, so from Ganfeng to Cattle or whoever, they've all had investments in lithium in Australia in the past. Again, this is one that I see as pretty unlikely. Liontown were pretty loud about being IRA compliant. Obviously, if you look at their off-takers, you've got LG, you've got Tesla, and you've got Ford, so none of them being Chinese groups. But when your back's up against the wall, you might get a bit creative and look at alternative sources. So can't rule out anything.
I think I know we harped on about Gina, but you got to think of who's a short term and who's a long term. Like, I don't think Gina bought this stake in Liontown thinking, I've got to catch this lithium bubble right now. She buys stuff thinking of 20, 30 years down the road of this big bloody empire. So someone that's got a big long-term view and doesn't really take into account what the short term's going to do and doesn't care, I'd say it's her.
Yeah,
So,
and that's a good point because I don't think Pilbara obviously has a pristine balance sheet, but they're probably looking at a storm out there and thinking we need to make sure we wear this storm.
Yeah.
And you might be a bit protective of your cash if you actually are forecasting yourself to lose money for a few quarters as well. So, yeah.
Righto, boys, the coal stock watch. What's going on? Stanmore and Coronado. Take it away.
So we had a couple quarterlies come out, and we thought it'd be interesting to sort of put them side by side and see how they looked.
Absolutely. Both Stanmore and Coronado reported today, and so let's put them together. And after we talk about them too, we'll talk about an aspiring coal producer who did a financing deal late yesterday as well. So to start with Stanmore, the $3.5 billion market cap, mostly met coal producer, is down 6% on the back of its quarterly. To break down their production by product, so 61% is PCI coal, 32% is coking coal, and 7% is thermal coal, for those unfamiliar.
What's PCI again?
Yeah. I've chucked in this point for you, Maddie. But basically, like, PCI coal is really high quality thermal coal, which can be sold into the met, i.e. the coking coal market as well. A relevant factor for Stanmore is the substantial divergence in PCI pricing versus hard coking coal pricing, which has emerged over the last year. Check out that chart there. It's pretty gnarly. Just how they were tracking each other and then they've started diverging. So if 61% is PCI, then you kind of wish you weren't getting that divergence. But the market reaction was interesting. I thought the results were actually pretty decent. Their operations are largely focused in Queensland's Bowen Basin. They concluded the calendar year 2023 with saleable production above guidance of 13.2 million tonnes. And if you recall our discussions of a certain peer in the coal sector, exceeding guidance is not the norm for some of the peers. So why the 4% sell-off on the quarterly today? I think Emmanuel Dat, who a former guest and friend of the show, he sums it up pretty well in this tweet. Emmanuel Dat says, as expected, Stanmore's low relative cash generation was expected given growth capex and other corporate matters. At this point in the cycle, I think focus should be on cash generative assets and returns to shareholders whilst at cyclical lows. So Stanmore's in a growth phase. They borrowed pretty substantially to acquire assets at what were arguably depressed valuations. So their cash generation at this stage is mostly going towards deleveraging that balance sheet, optimising production, rather than building cash balance and giving that back to shareholders via buybacks and dividends. Keep in mind though, Stanmore, they've had brilliant returns over the last 2 years. The stock is up about 300% in the last 2 years. That's been a huge outperformer. And from memory, Regal have been really aggressively long the stock too. A big win for them. They bought, so Stanmore, they bought 2 coal mines from BHP for about US $1.6 billion, which paid for themselves within 12 months.
Oh, Jesus Christ. Isn't it big dollars in bloody coal and iron ore? Us, coming from the underground background, we're just we're like toes on a foot.
Yeah.
Coal and iron ore, hey?
Bulks, mate.
You can,
if you put it on a train, you can make heaps of money.
You wouldn't think things that are bloody used to be, what are they, $150 a tonne compared to we've got to mine copper's bloody, got to get it to 15,000 to make money out of it. Yeah. Totally different concept, isn't it?
So different. Yeah, so different. But you add a few zeros to what we're used to talking about.
Yeah.
The other stuff, don't you?
Yeah.
On the other side, Coronado, so they come out. They've been a big underperformer amongst the coal names. In the same 2-year period, their equity is only up 22%. Interestingly, both companies trade at similar forward-looking multiples. Coronado 2.85 times next 12-month EBITDA and Stanmore 2.79 times. So today, on announcement of their quarterly results, there was some really wild price action in Coronado. Initially, the stock opened down 10%, and then it regained all of that loss plus more to close the day up 4%. Which, I don't know, I can't explain that. But a bit of background on Coronado. They're another met coal producer with assets in Queensland, Pennsylvania, Virginia, and West Virginia. And when reading a quarterly, you know what I always look for first, gents?
Cash.
Changing cash, always. I could have been mistaken for thinking this quarterly was still the September quarterly. I'll flash up now. September's quarterly, closing cash of 337 million, net cash of 95 million. And then December quarterly, closing cash of 339 million, net cash of 97 million. Basically the same numbers. And which is just a bit surprising, right? Because Coronado's a pure play coking coal company in a really healthy coking coal environment. So I found that intriguing.
Yeah, I mean, let's not mistake it. It was a pretty bad quarterly, in my opinion, from Coronado. They missed production guidance, which had already been revised lower. And then on the cost front, they exceeded their costs, which had already been revised higher. So
yeah,
it's not good.
We often share with the money miners some of the analysis we read from Respeculator. This stuff, mate, how many times have we had, like we're writing the show notes, we're putting out the show notes and we're doing it, we're going into the weeds and then like before we start filming, bloody Respeculator puts out an email.
That's probably why he doesn't want to come on the pod because
it's infuriating.
He's scared you're going to stick your tongue down his throat when he walks in, assuming it's a he. You don't know.
Okay, so think he's got some punchy views on Coronado worth sharing once again. The firstly, this was his tweet on today's Coronado quarterly. He says, Coronado misses revised production and cost guidance. They only just put out a couple months ago. They made no cash again, net cash 95 to 75 million. And the buyer of the major shareholder stake getting cold feet, question mark. And what he's highlighted here, if you look at it, he's highlighted a section of the quarterly that says, as at 31 December, the company had not been advised that the closing conditions in relation to the acquisition had been satisfied. What he's referring to is an agreement that Coronado's major shareholder, EMG, had entered with 7 global investments to buy their stake. So this was put out, I think, September or something like that last year. It was months and months ago, but clearly still hasn't finalised there for whatever reason. Side note, 7 Global Investments is the private equity arm of one of the world's 300 richest people, Czech billionaire Pavel Tajak. Probably saying that wrong, but he made his fortune with coal and energy business in Europe. And it's the same investment group that acquired SO4, that WA's Salt Lake Potash project out of administration in 2022.
I think they're slightly different check sizes that we're talking about. Pardon the pun there, but it's also
I like that.
it's also given me flashbacks to just yesterday talking about Liontown. These are terms where we thought the thing was done and dusted. You know, it certainly wasn't on my radar that the banking commitment wasn't finalised with Liontown. And same goes here. I thought 7 had already bought the stake. So I think a lot of people will be looking back and seeing that the dotted line has been signed off and that's all signed, sealed and delivered.
Well, I think I mentioned yesterday about Liontown. This is the first time we've thought something good wasn't going to happen to Liontown because everything's just been, debt's been handed to them. Everything was like easy to get funding. I'm sure it wasn't easy behind closed doors, but it wasn't ever stressed. But things can change.
Yeah. Back to Respeculator's opinions on Coronado. I've got a few more for you. This one he posted a month ago really stuck in my mind. He says, Coronado, Curragh Mine made US $32 million loss in Q3 whilst met coal prices roofed. Its Buchanan mine in the US, in brackets, the cash cow, is about to go through rough geology where yield drops from approximately 65% to 70% all the way down to 50%. What this does to the economics is pretty big. The second photo attached in that tweet is the annual yield in Buchanan. You see that the next 4 years of production at Buchanan show the substantial drop-off in yield. It's pretty startling when you look at it. He follows up with, the 10 to 15% yield loss is lost on people. That is literally their entire margin. Gone, it's over. They are expanding to maintain production. And to round it all off, he goes, ask yourself, why in a $300 plus tonne met coal bull market did the major shareholder sell out? This thing is the ultimate shitco, and why met coal is $300 per tonne.
Jeez, are you getting commission on his Substack by any chance?
No, I just wanted an excuse to say the word shitco on air. So you guys get the picture, right?
I certainly do. And I mean, he really hammers home the point there that people are attracted to some of these coal mining companies because of the yield, obviously the free cash flow yield or the dividend yield or whatever. And if that's non-existent, then why be there? So
yeah, you know what I really want to do. I think I've often sort of wondered who are the best people to get on the potty to maybe talk more about coal. And I don't know if there are too many people that fit the category of, would come on the podcast and be good to talk about. But who I reckon we should get is Emmanuel Dat. He wrote about the coal market just a few short days ago. I reckon
Big Daddy, he's bloody just ticks all the boxes, doesn't he, the big fella?
Yeah.
I think that'd be interesting.
Yeah, right.
There was one more in the world of coal. This one's in the Hunter, though, not up in Queensland. So
God's country. Tooheys new territory, boys. I love it.
to be right at home there, mate.
And the pokies.
So this company, Australia Pacific Coal, finalised a funding package to restart the Dartbrook mine. So Dartbrook has been on care and maintenance for around about 18 years. So the financing...
A lot of environmental and lobbying and stuff around that. You'd drive through the Hunter and there'd be signs up everywhere about the Dartbrook mine going against it.
I didn't know that. Interesting to hear.
Back in the day.
So the financing is for 3 years, US $60 million. It's a debt facility with Vitol. So they're, if you're wondering, a global commodity trading giant, really. So the funds are going to cover new conveyor, refurb the coal prep plant, plus purchasing mining equipment. Pretty standard stuff there. Now, regarding first production, we are expecting an update in the quarterly, so in the next few days. And with regards to the terms of the financing, I was a bit disappointed to see that they didn't reveal what the cost of debt was. I wasn't surprised, but I was disappointed. And as you'd expect, Vitol have
What was it? SOFR plus a margin?
Plus a margin.
What was the margin?
Could you put any more generic statement in there? So Vitol locked in the sales and marketing rights for all the coal to be produced, not just for that 3-year period, but for the life of mine. So you can bet that's where the commodity traders is really going to ground out their margin. All right, guys, rapid fire round.
Oh, rapid fire.
Firstly,
We should get, to bring it in, we could get the thing out of Scarface, say hello to my little friend. That could be the rapid
That
fire
was
intro.
quite a good accent. I like that.
Right, I'll take it away, JD.
Start with True North Copper.
All right.
I got shares in this. I gave up on them actually till today.
Till today.
Lucky I kept it.
Ding for Maddie here. So True North Copper are up nearly 50% today on the back of an offtake agreement penned with Glencore relating to concentrate production from its Cloncurry copper project. The agreement covers 100% of the concentrate, up to 1 million tonnes of ore per year, with that ore to be processed at Glencore's Mount Isa smelter only 120 kilometres away. It's been a rocky journey for True North Copper, who came to market with an IPO in June last year at 25 cents today. Despite going up 54% in the single day, they're still down 60% from that IPO price 9 months ago. I'll be keeping my eye on their cash flow when the quarterly drops last month.
Speaking of cash flow, Delta Lithium came out with their quarterly today. So they're now kept at $190 million, gents, with cash of $116 million. So that is an EV in and around the $70 million mark now.
They might just become Delta Gold again, or go back to the gold.
Red Dirt.
Red
Red Dirt, I think. Was it gold something before that? But,
There's been a couple iterations in the...
If they can find someone that wants to float the copper out for them, that might be the best place to start, I think, because I don't think narrow vein nickel is... narrow vein lithium is going to get a leg up if
in this market,
if bulk lithium can't even.
I think you're bang on.
Mayur Resources, Maddie, this is that Papua New Guinea lime company that your NRL idol works at.
Oh, Darren, he's not my bloody idol. He's a Queenslander.
Oh, sorry. if you were born in Queensland,
how dare you?
Mate, if it was bloody Brad Fittler or a bloody Paul Harrigan or like a New South Wales legend.
Yeah, all right. Yeah, well, I can talk negatively about the company then. Good.
Spud Carroll. Who else we got? Andrew Johns. Anyway, they're not in mining.
Yeah, classic. So remember we did a deep dive on them when we saw Appian do a financing deal with them last year, surprisingly. Well, they came out of suspension today after being there since a halt last Thursday. They've sold 51% of their Oracolo Bay Mineral Sands project to PTC First Nickel Industry. PTC First will have to fully fund the project, expected to cost Aussie 25 million bucks. They've also subscribed for shares in Mayur at a 15% premium, equal to Aussie $7.3 million.
What's interesting about this one, Trav?
Well, I mean, typically not very much, right? A Papua New Guinea company, like we're talking small dollar amounts with companies we don't really know about. Interesting thing to me is how the AFR sort of just talked about it 2 days before the ASX announcement even surfaces. I'm always intrigued when the relatively small deals and small stuff, becomes surprisingly worthy of a Street Talk article. I want to know what the why on the ones where it's just like, you don't belong in Street Talk, but I want to know why sometimes Street Talk puts stuff up there that's quite small.
Like the Evolution capital raises.
Alrighty, gents. Another one that caught my eye. Cali Metals. So we've spoken about them a couple of times now. Change in substantial came out. MinRes now at 14%.
Element 25. So they put out a feasibility study on Butcherbird expansion. These guys are a manganese producer. The logistics for it all mean it's not exactly the most cost competitive operator out there. It's located 130 kilometres south of Newman, aka remote. In their last quarterly, they were focused on the stockpiles of Butcherbird only, while the study for the expansion completed, and that study has landed today. Even though the numbers look okay in it, it's pretty hard to get excited about expansion of an operation that is currently only processing stockpiles and not mining. In December, they got approved for a US $57 million in tax incentives for their proposed Louisiana facility in the US. So let's see where that goes.
Alrighty. Last but not least in our rapid fire round is Iluka. So they were up 3%. They came out with their quarterly today. So down 42% in the past half year. And that's a bit of a reflection on the mineral sands market. It's not as tight as it once was. And I think you can bet that the Chinese economy is a pretty big factor.
And the rare earth market down as well.
Exactly. So they are not just a mineral sands company. They're soon to be a rare earths producer with the Endeavour refinery. We never really dove too deep into this, but it was a bit before the potty had started that they got this huge free kick, a $1.25 billion non-recourse loan with just stockpiles to be used as collateral. That is the free kick of all free kicks.
Yeah, Trav, what do you think about that free kick from the government?
Oh.
Well, here's a question. What's the difference between if the government stepped in for BHP for operations compared to stepping in for CapEx for companies? How do you view that differently?
Yeah, I do view that quite differently. I think CapEx by definition is only for a small period of time, right? You build the thing. But then, if you're subsidising OpEx, that does not have an end date. And then, I do also view it differently if you're subsidising an industry like nickel where, to the best of my understanding, Australian nickel producers are largely not going to be competitive because of a change in the cost curve. I think when you look at the dynamics of the rare earth market, it's a bit different, a bit more complex than the nickel market.
They're not competitive because their grade is shit.
It's a cost profile. There's plenty of really good points to make.
If they had the old Campbell grades back in the day, they'd be making a lot of money, but Leinster and Mount Keith is not high grade. Yeah,
plenty of really good points to make about, the environmental impact of what's happening in Indonesia and the likes. But, whether that justifies Australian government subsidies, I don't think is a separate issue.
There was another juicy comment to make back on Iluka, guys, and I think they timed this very, very precisely, knowing when we would wrap up our potty in late December. So they had a CapEx blowout at the Endeavour refinery. Now, how they worded this was a pretty funny one. They said it was a 20% blowout versus consensus broker estimate for the project. So consensus broker estimate was not the number that the company had previously released as guidance. So we'll put up on the YouTube so
very sneaky.
The money miners can see the wording around that one, but that was quite cheeky, I thought.
That was they haven't actually started building it yet, but this is just based on the feed work undertaken to date by their EBCM Fluor. So now they're saying the CapEx is going to be between 1.5 to 1.8 billion with a project updated expected by the end of the quarter. And the previous capital estimate was 1 to 1.2 billion. That's more like up to 80% higher on my maths, mate.
Don't let that get in the way of the story, mate. All right, we mentioned the BHP Xplor program at the top of the show. I thought we'd run a couple comments on this one, so people might think, what on earth is it? Essentially, BHP just provide a small amount of funding and some expertise, and I think it's a kind of cool program. The dollar values are US 500 grand for the companies that make the cut. This is the second sort of cohort, as they call it, that they're running. It's a 6-month program, and it just aims to get these companies moving at a bit more speed and de-risk some of the geological concepts they're looking to test. So the companies in this cohort are Longreach Minerals, East Star Resources, Palace Resources, Hamlin Gold, Cobre, and Equivest Minerals. So some of them are private companies, but the share price movements caught my eye. Cobre were up 100%. East Star, which are London listed, were up 30%. Hamlin Gold were up over 30%, but finished the day flat. And then you've got the remainder being private companies.
So
Is that it'd be interesting to see if that 500 grand is and the share price movement is equivalent to the change in EV or not.
oh, it'd be way more, wouldn't it?
Yeah, I don't think Cobre's EV is a million.
Yeah.
Was 500 grand before this.
No, I don't think so. And that 500 grand is a grant as well. So non-dilutive funding, which is good if you're the company, good if you can get it.
What is this? What do you think of BHP Xplor program, mate? Is this like the Y Combinator for mining?
They're getting creative. I mean, 500 grand isn't going to get you too much drilling done. So you can see a lot of these are testing more theoretical ideas or doing more other means of analysis as opposed to just drilling. But it's not a negative for the industry, right?
I think it's more just like they're buying extra tickets in a chook raffle, like just load them up. So just more chance of winning a chook.
Yeah.
Yeah, I mean, we'd have to get into the terms, but
I'm all over the analogies today. I'm ripping a few new ones.
Grant's not
the
equity.
toes on a foot. Oh, mate, just
Mate, a few more raffle tickets in Chase the Ace.
I'm all over it, boys. Right.
Fellas, one more to round off today on. So we spoke about the former Endeavour Mining CEO getting booted earlier this month. Now he's had to forego his salary, so it doesn't look pretty. He forfeited potential earnings of US $17.6 million, plus the REM committee exercised their discretion to claw back money that he's earned to the tune of US $12.5 million. So that totals is in forfeited and clawed back earnings $29.1 million US. So
wow, I don't know what the contract is, but you must have done something bloody horrible to.
You got to look at the positive. It's about 14 million saved in tax. So, like, look, if you're a glass half full type of guy,
it's good for the company.
Job, good for him on the tax front. Like, win-win.
Sebastian D. Montesus. You reckon he'd do an interview with us?
We'll send him an email. Another one who doesn't reply to us.
He and Madeleine King can come on the show together.
We'll shout your flight over. I love your work, boys. It's good stuff. Right, thanks to all the partners. As always, Rory Stein, give him a buzz at Investor Hub. In town next week. DSI Underground, Terra Capital, McMahon Mining Title Services, Future Proof Consulting, Anytime Exploration Services, KCA Site Services, Brooks Airways,
and Cadrill.
Yeah, that was good.
Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.